Hello and welcome to Bloomberg Quint. If you've been tracking emerging markets and if you care about someone's experience in running one of the largest and the most successful fund houses, then Mark Mobius needs no introduction. We're here to talk about his book, Invest for Good, A Healthier World and a Wealthier You, which he has written with his co-contributors, Carlos von Hardenberg and Greg Konechny. Well, Mark, your book has certainly been a breath of fresh air, especially because it's not always that we speak about environment, social and governance investing, and that too in emerging markets. Thank you so much for joining us.
Thank you. Thank you for having me.
So I'm going to start off with a quote from a book. Well, here there is what they say is allocations of capital we make today will determine the kind of world we live in tomorrow. Environment, social and governance, also known as ESG investing, active investing and emerging markets. How did you all string these seemingly different ideas together?
Well, the main reason is because we realized that over the years since we started in 1987 investing in emerging markets, that in fact we were paying attention to the environmental, social and governance aspects,
right,
but they were not defined as such. The ESG definition or word combination is something relatively new.
Right.
But we looked back and we said, actually we've been looking at these factors, but not defining them as such. So we wanted to explain to people that one of the reasons why we were able to make some successful investments is because we did pay attention to these things.
Right.
Now, research is being showing that the ESG factors do have an impact on the performance of companies.
Right.
In other words, companies with high ratings of ESG tend to perform better.
Yeah.
So this is very, very important for investors because not only can you be investing to make the world a better place,
sure,
but you can also make money doing it.
Right, right.
So this is a very important message that we try to come across to people.
Right. But Mark, I'd also prod you a little more about how you distinguish active investing against passive investing in developed markets and emerging markets, the kind of growth that we have seen, as you have mentioned and written in the book.
That's another very, very good point that we make in the book. And that is, we have found that more and more money is moving into passive funds.
Yeah.
In other words, funds where a machine can actually do the investing.
Right. Yeah,
you
absolutely.
just follow the index and invest in the stocks that the index has in their list,
right,
and that's it. Now, what does that mean? It means that you don't have an opportunity to influence companies,
sure,
necessarily,
right,
unless you make a conscious attempt to do so. And in active investing, you do that.
Right.
You tend to have an impact on companies. So we said, look, let's try to establish a company that is really active, is going to go into companies and try to make changes, particularly on the governance.
Right.
Because unless you have good governance, you're not going to be able to impact social and environmental factors.
Sure. Right. Okay. So I want to talk a little more about the scope and the state of ESG investing. And well, according to the book, we also have Global Sustainable Investment Alliance, which suggests that about $23 trillion worth of investments was towards sustainable management. And this is according to 2016 data. But what is also very interesting is that while Europe leads this, with nearly a little over half of this investment, Asia is falling much behind, as well, standing at around just about $52 billion, if I'm not mistaken. Mark, can you tell us a little more about the current state as well as the scope for ESG investing going forward?
Well, as you stated, Europe is very much ahead of this idea of looking at ESG.
Right.
And you're finding huge pension funds in Europe saying, look, we will only invest in companies that are compliant with ESG standards. In Asia and in many of the emerging markets world, they're not familiar with this term, ESG. They haven't been educated to be aware of these factors. But it's changing very, very rapidly, particularly here in India, because as you know, Indian businessmen usually can read and speak English,
right,
so they can read all the international newspapers and be aware of the concepts of sustainability and ESG.
Right.
So the emerging markets are catching up very fast, partly because of knowledge dissemination, but also because investors in emerging markets are demanding that companies comply with ESG standards.
Right. Okay, Mark, so I'm going to get in a little more detail when it comes to ESG standards. You've written about environment and social in one chapter, and you have a completely different chapter for governance. Things get a little more complicated. And you've also actually written about the hierarchy and the ladder that some of these companies can climb with respect to ESG. So let's say, for example, you have a company which is doing very well in terms of environment and social. Governance can always be a little more complicated, which is where you may have a company which is high up in the ENS ladder, but in terms of governance, there will always be issues when it comes to approvals to be, sustainable in general for all three of them. Where does the company stand in that case? And do you think that investors will then catch a fancy? Because this is a problem which is very much in focus, at least as far as countries like India is concerned.
Yes. Well, that's a very, very good point, because there are companies that do comply with good environmental and social standards, but fall behind on the corporate governance side.
Right.
So what we do is we go into a company and say, look, you are not getting very much in terms of your share price. People are not investing in your company,
right,
mainly because the way you treat shareholders is not in line with good standards. For example, are you paying dividends? That's a very, very important aspect of treating your shareholders properly.
Right.
Secondly, how many independent directors do you have on your board? How many women do you have on your board?
Right.
Questions like that we ask, and then we try to persuade them to make changes so that when the rankings are done, the ESG rankings are done, they will then climb that ladder into a higher and higher ranking. And of course, once they have a higher ranking, more investors will pay attention and invest in the fund.
But there is also the aspect about corruption. Let's say if a company is paying you dividends, it has enough number of women on board, they are doing everything else that is in their power in terms of governance. But then it comes to dealing with authorities. That always remains a challenge. Yeah. So that is something that they are going to have to tide over. That remains a challenge there.
Well, yeah, well, we look at this very, very carefully. In fact, one of the most important parts of our research is to look at the backgrounds of the people running the company.
Sure.
Have they been involved in any fraudulent activities? Is the company under their direction been involved in these sorts of things?
Right.
And we will absolutely reject these sorts of companies because we know eventually they will get into trouble.
Right. Okay. All right, Mark. I'm going to move on to another example, and again, this is where the book cites, an ESG-rated microfinance company in Botswana. Mark, if we apply the same example to India, well, this particular space is in a little bit of a flux. There are a lot of changes in regulations, and oftentimes what happens in the microfinance sector can become a scapegoat to government policies. My question then is that will these companies have to reach a certain critical mass or a certain size before they can actually be taken seriously, especially when it comes to this aspect?
Not really. In fact, we look at smaller companies with the potential to become larger.
Okay.
So that is really the focus. In other words, we love a company that is improving their environmental, social, and governance standards and is willing to listen to us to make these improvements in conjunction with our advice, because we then know that the share price will begin to appreciate. Right. And they will then also be able to raise more capital to expand. So this all fits together when we are looking at these companies. So small companies can be very, very valuable in our eyes.
Okay, so it's always going to be a challenge when it comes to the government's point of things. The government will always will give priority to growth as against following certain environment standards or social initiatives. This is where the government may not care about industries in general. If they follow a certain standards, and as is the case in India, in many of the local states. My question then is that what are the challenges here, and what does the government do, and how does it pitch itself between growth against when following some of these standards?
Well, this is what is being encountered by India and other countries around the world. They begin to realize that their desire for rapid growth results in lots of pollution, lowering of social standards, poor worker health, et cetera, et cetera.
Right.
And in the long term, results in higher costs to the government. So this realization is beginning to hit home to countries around the world. And for that reason, they're beginning to think, well, maybe we should not be doing what we're doing. Maybe we should move in another direction. And multilateral institutions like the World Bank and so forth are paying attention to this. So when they make loans, they say, look, you're not complying to any environmental standards here. We're not going to make this loan unless you comply.
Right.
And the same thing is true with big institutional investors. They're asking these countries and companies to comply.
Okay, Mark, so, I'm going to come back to your personal experience when writing the book. You all decided that you would set up a fund, an investment business based on ESG investing and writing a book. Well, as a journalist who writes articles myself, my thought process crystallizes further when I have certain thoughts and I put them down on paper and write them. What has been your experience when it comes to writing this book?
Well, that's the same thing that happened to us. When
Right.
we put it down, it crystallized a lot of ideas.
Right.
And more importantly, in the book, we recalled many instances in the past where we encountered all kinds of governance and environmental, social problems. And the reason why we wanted to put these instances in the book was to make the book interesting, number one.
Sure.
And number two, to illustrate to people exactly what happens on the ground.
Right.
Some specific real-life examples.
Right. Well, and of course, we all know the book is full of examples out there and some very, very interesting stories as well. Well, perhaps a final question then, Mark. I want to, as a concluding answer, could you just tell us about the power of ESG investments that the investors can influence on companies, again, when it comes to this particular aspect, and also keep a global integration in mind. Why should emerging market companies climb the ESG ladder?
Well, I think the key is share price appreciation. That is really attractive to companies, should be attractive to the managements of companies, and of course to investors. So our basic premise is that if we can improve ESG, and particularly improve governance, then share prices will appreciate.
Right.
Now, in order to do that, we've got to get the cooperation of the company. There are two ways you can go about this. You can be very aggressive, buy 20, 30, 40% of a company and then say, look, I want somebody on the board and I'm going to demand these changes be made.
Right.
We found in the past that approach is not really that effective. What's more effective is to buy, of course, you got to be a shareholder, but sit down with the management and say, look, let's work together to improve your company, improve the governance, and improve your share price, and also improve your business in general.
Right.
So it's sort of a win-win situation.
Okay, well, there you have it, guys. Don't forget to go through this very, very interesting and a very different take on investing. That is, you have it, investing for good. A healthier world and a wealthier you. Of course, Mark is one of the co-contributors. There you have it. Mark Mobius, thank you so much for joining us.
Thank you very much.
We wish you the best for the future.
Thank you. Thank you.
Thank you.
Thank you again.